Hi, and welcome to this ninth episode of talks about small business issues. And the talk this time is about the owner's compensation. I remember when I first put in the suggestion into ChatGPT application, the reply came, it was like weird or strange. Said it's a very real blind spot for small business owners, period. So it's a blind spot, it's overlooked, it's neglected, it's ignored, it's not important, and maybe it doesn't even exist. I believe the business owners themselves are partially to be blamed for this, as they will sacrifice a lot for the survivability of their companies. One reason is that this company is their blood, it carries their name or their family's names, and it's sometimes or many times, most of the times, more important than their families even. At least it used to be. I remember personally, I was not drawing a salary, or I was taking money from the company, but it wasn't treated as a salary. Okay, so we can show some profit at the end of the period. The problem is that is more than one fold. On one hand, you show everybody else that your role is not important, and they stop treating you that way, which is bad. You are being the leader and you are left aside. Everybody thinks they do a better job, and you are an extra burden, just enjoying more perks than them, having maybe that company parking, having your own office. The other thing is that it doesn't show the real picture of the company, and this works when you play like for the first component of the owner's compensation, which is salaries. A lot of times the owner will be maybe the accountant doing the accounts work, or be the main salesman, or any other role. So I forgot to say that, the owner's compensation has to be, the owner has to take money from has to fill three buckets. One of them is salaries for the roles he's playing. So if you are the accountant, you draw an accountant's salary. That's one thing. If you want to sell that company, and maybe the first thing the buyer will do is to add or deduct that cost, that salary of the accountant from the real profit the company is making, and try to reach the real figure for the net profit of the company is making. And then he will make up the price for that company. If the company uses real estate that's owned by the owner, then that rent has to be at the market rate as well. But this is showing also, or what is not showing, what is hiding, is your hard work is covering up for the inefficiency, for the if you are doing that work, then somebody is not working. Maybe there are more people than required. There is a leadership shortage here. There are profit leakages. The company is not efficient. There are more people. You have to play that role. You have to make it efficient. You just have to take out the people who don't deserve to be there. Period. You have to know who's not doing his work. We discussed some of that when we spoke about profit leakages. So that's the first bucket you have to fill as an owner of the company. I'll jump now to the net profit, which is expected to be the owner's part. I mean, completely for the owner. But the problem with the net profit is it's open to so many interpretations. The way it's calculated. Second issue is that it's calculated at the end of the period, maybe following that period by maybe 3 or 4 months or more. When you come to withdraw from the net profit, definitely cash considerations, whether that money is available or not, or it's utilized to pay for goods or to invest in receivables, goods in transit, pay for some advances, and maybe any other thing. On top of that, the bank will ask you to keep a major portion of that net profit into the company, so you can grow the company, so you can augment the capital base of the company. So the portion that's, at the end of the day, the portion that's supposed to go to the owner will not go the way you expect it to. We'll leave it there and talk now about that, and maybe the most important portion, and that's the leadership role you are playing, which you definitely deserve compensation for. Leadership role, I mean, you are setting the direction for the company. You have to know where you are going, to gauge the progress, to show everybody the direction, to make sure that everybody is doing his work. And if he's not doing that, he has to be out, to ensure that the company is moving at the optimal sort of speed. That's one thing. Make sure that you have the right talent. That's another big issue. Make sure that the way it's placed has to do with pricing, the gross profit you are earning, the net profit, these things. That's the leader's role. Nobody else will talk about these things. So you have to play that role. If you don't, and the company doesn't perform at its best, so then you are not doing your work. Then you are completely or partially acting as the bottleneck for the company. So, and the message here is that leadership role and the compensation you have to get for that is pay for performance, for your effort as the leader of the company, which if you don't play, you ruin the company, especially nowadays with the existence of AI. In his book, where he talks about profit being everything, George Cloutier is talking about, giving 3 to 4% of revenue as compensation for the role the owner, for the CEO role the owner is playing. So to sum it up, there are 3 buckets to fill for the owner, or 3 income streams. One is salary towards the roles he is playing. Second is the net profit, and third will be the leadership role. Thank you so much for listening. Hope to see you next week. Please don't forget to comment, to like, and to subscribe to this channel. Thanks again.